So I look at that more than anything as the Chinese public pulling metal off the exchange. Certainly they're being inundated by what's happening with Evergrande and their housing developers, but the Chinese are it's in their blood. I also take a look at what's happening on COMEX, and I think it's very bullish. In fact, as bullish as anything we've seen in a very long time. Commercial banks reduced their net short position in gold by 12,500 contracts to about 225,000 contracts, which is the lowest and most bullish position that we've seen in months. And at the same time, they're doing the exact same thing in silver, reducing their short positions considerably, making it a very, very intriguing backdrop to what could potentially be a nice rise in the price of gold and silver, just simply based upon the positionings of the 8 large traders on COMEX who have pared down both their gold and silver short positions to the lowest level that we've had in months. So that, I think when we take a look at trying to gauge where this market is going, the truth of it is that, and the unfortunate truth is that it's really being set by 8 banks, really 8 large traders on the COMEX market are dictating where the price of gold and silver are going. It's interesting to note that Bank of America has a massive short position, like 850 million ounces short, and debatable why they have it, who they got it from, why they're doing this when they really don't have a history or a track record of shorting the metals market. They have a very, very large derivatives position, which dwarfs the derivative position of their gold and silver position, dwarfs it. But by the same token, it's very big in relation to the overall COMEX picture. When I look at my own portfolio, it's almost, I don't know the exact percentage. For the last 2 years, maybe 3, most of everything I have bought has been silver. Platinum and palladium are glaringly lacking from my portfolio. I have a very small position in platinum and an even smaller position in palladium. To me, those two are tertiary investments at best. The argument for buying platinum right now is as valid as it is for buying silver in many respects. But when the world looks to preservation, especially as currencies come under fire, and I think that will happen much more so with realizing the Fed is really stuck between a rock and a hard place where, they may be talking about getting tough on inflation, but when the markets start to crumble, will they follow through with it, or will they reverse course and double down on tapering and stimulus and letting inflation run? Because let's just be honest, in order to really do something about inflation, they're going to have to raise the federal funds rate almost 700 basis points or 7% just to get above the CPI. And that's not going to happen. That's what Paul Volcker did. He raised the rates to 20% above the level of inflation. But that's what would have to be done in order to really get tough on inflation. And if that happens, the markets blow up, which we can't really imagine.
Small ebook, big impact, The Wealth Tree. The only 4 ways that will make you financially free forever. Download it here for free.
So what we're looking at is a further, I think, denigration of the value of the dollar. And as the dollar slides, I think, and all currencies slide, I think the place to be is in gold and silver. I think silver is the value proposition of a generation. When I look back, done again over the years, at all of the trades that have made us successful, they've centered around anomalies in price. And when you realize that the 150-year average between gold and silver is roughly 42 to 1, and it's trading at almost double that, at 80 to 1, or very close to that, that's rarefied air. In fact, if you were to pull up a chart of the gold to silver ratio over the last 100 years and put a piece of paper right at 40 and look below and look above, you'll see that 10% of that 100-year chart is above, maybe even 5% is above 40, and almost all of the action is below 42 to 1. In other words, what you're seeing is an opportunity in silver in its relationship to gold that it is massively undervalued. And again, this has a lot to do with the COMEX positioning of the big 8 commercial banks. But with that being said, it's a value proposition of a generation. Now, you can make the same or similar argument with platinum, The difference really is in the duality of demand that silver offers. Most commodities offer one demand source. Silver offers two. And in a green and digital world, the need for silver industrially and the expansive need for silver industrially is incredible. And as we've documented well over the last 2 years, the monetary renaissance in silver is also extraordinary. So you have duality in demand. If you bought silver right now and compare that value of silver into gold, it's roughly 80 to 1. 80 ounces of silver by 1 ounce of gold. But if you realize it's been coming out of the ground, or been priced rather, for 150 years at about 42 to 1 on average, and is coming out of the ground at 7 to 1, when that ratio snaps at least back to its 150-year mean, which it will, that's a double when you switch into gold from what you could otherwise buy today. And if it gets anywhere near its geologic ratio right now of 7 to 1, I mean, that's 11 times the return. Now, I'm not saying that's going to happen, but what I am simply saying is that this is an anomaly in price. So to me, silver being by far the best choice. Gold ultimately where I think people want to be, but not yet. Silver is much tighter than gold is in terms of physical supply. But, look, silver and gold have almost a 90% correlation for the last 5,000 years. So in the worst case scenario, you're stuck with silver, so what? So it's been viewed as wealth for 5,000 years. And yes, it's not as convenient as holding gold, but I think if gold goes to the moon, I have a very hard time believing that silver doesn't tag along for the ride. So wouldn't be the worst thing. Junk silver used to always be the least expensive way to buy it. It isn't the least expensive way to buy it any longer. In fact, it's more expensive than anything we sell with the exception of Silver Eagles. But it offers the greatest utility, with 14 dimes being almost exactly 1 ounce of silver. You have 0.00715 ounces of silver, or roughly $2 melt value per dime, roughly. It's going to give you 14 transactions in a bartering situation versus one with a 1 ounce silver coin. So the utility you get in silver is one of the reasons why you've seen it go so high. It's also emblematic of much of what I've been saying for the past 2 years. And I know I've been early, but what I've been saying is that it's getting hard to find things. And no one is selling us anything. So when you look at the premiums of silver, where 2 years ago, you and I were running a special at under $1 an ounce over the price of silver for junk silver. And right now, I think it's like $6 an ounce over. So $5.95, something like that. And so you're talking high premiums right now for junk silver that traditionally haven't been. It's been the lowest price form of silver. So the only reason I would tell people to spend the money on junk silver would be if they really want that utility. The 1 ounce coins, look, we've talked about the fact that we're U.S. Mint authorized resellers. And the 1 ounce silver coins by the U.S. Mint, they're amazing. I love the Eagles. But here again, these premiums have, in 2019 in November, had you bought Silver Eagles, you would have paid $3.29 over the price of silver. Now, if you're paying $8.75 to $9, that's cheap compared to where they've been for 2 years. So I have a hard time getting behind Silver Eagles, although I love them. A lot of people believe that U.S. minted coins is the path to take. And there have been rumors out there that the government would confiscate at some point anything that isn't American minted. We don't need to go down that path, but simply to say that I think you're losing value by buying both junk silver and American Eagles. I have both in stock right now. The reason I have them in stock is I tell people usually to stay away from them lately, much to my own detriment. But I do think that the value that you find in junk silver and Silver Eagles is less than you find in the 10-ounce bar, in the kilo bar, in the Krugerrand, in the Kangaroo, in the Maple Leaf. There are other items that you can buy that give you much better value. In general, I think the best way to approach this is to strive to get the most number of ounces as possible, because in the end, it will matter how many ounces do you have, without stepping over the penny wise, pound foolish threshold like we were talking about. If I can sell you a 1,000-ounce bar for $1.65 an ounce over the price of silver, is that savings of contrast it with like a 1 ounce Kangaroo or Krugerrand, is that savings of roughly, $2.40 or whatever over the price of silver, or $2,400 per 1,000 ounces. Is that commensurate with the loss of flexibility? To some people, the answer may be yes. To me, it's not yes. I think you can never be too flexible. You can never have too much utility. You can never have too many options or exits in a portfolio. So again, get as many ounces as you can without being penny wise and pound foolish. And this is one of the reasons why I really like this special for kilo silver bars and 10-ounce silver bars. Not lacking in utility, but really great value in comparison to the high premiums we're seeing in the sovereign coins. I think everyone should own some sovereign coins, for sure, and maybe a little bit of junk silver. But if you're looking for the best value right now, I think the sovereign coins, if they're lacking anything these days, it is value.